Good evening. I'll be taking you on how to use MACD, that's the moving average convergence divergence, to determine market trend and to be able to know when to take trade, the perfect time to enter a trade. I already have it set up here, but in order to um make you know how to go about it from the scratch, I would be starting all over again. I'll be setting it up all over again. So this is trading view. I advise you use trading view for the setup because um the moving average convergence divergence is not really showing. It does not. I don't like the way it's been set up on meta traders. So I would suggest, or I would advise you use trading view to set it up. So I'll be deleting the old setup and starting the old configuration, the old setup again. So now I'll be the market I'll be using is the Nasdaq 100 as 100. That's the um CFD I'll be trading with, and I'll be using 4 hours time frame. It's better to use um a higher time frame to be able to have a good um determinants of where the markets will be trending towards. You can use the 1 hour time frame or the 2 hours or the 3 hours, but I prefer using the 4 hours time frame, which is more detailed. So how to go about that? Down here you click on the indicators. So it brings out favorites, a whole lot. Trading view has a whole lot of indicators. So you use the search. This you make use of the search here, and you search for the moving average convergence divergence. That is MACD. You're going to see it. It's already popped up, and that's here it is. Click on it. Click on it. Once you do that, cancel. It's already set up. Oh, sorry, I clicked on it twice, so you can just simply delete one. Now the configuration, can see you just use the default configuration. The fast length, that's the 12. It's usually 12, or it should be 12. The slow length should be 26. The should be used for it should be used on close, not open market, just close. Leave it on close, and leave the EMAs, leave everything the way it is. Now the histogram also, I suggest you leave everything the way it is, because it's the representations alone are quite clear and quite straightforward. So I would suggest you leave it the way it is. Press OK. Then okay, let's try to reduce it a bit. Things to okay. Let's also do the next setup. The same procedure will be using moving average 200. You'll find out why we're using the setup. You'll find out why we're using the setup. Now the same procedure, moving average, click on it. It has been selected. Go back. You already have it on. Now you click on this side to edit. Now you change this length, you change the length to 200. That's all. That's all you need to do. And now let me go ahead to illustrate. I will need to bring this higher just for the illustration of how the how to interpret the moving average, convergence, divergence. Now you can see here, you can see here. Oh, sorry. I'm actually trying to look for. Okay, see what I'm looking for. Oh, no, it's not it. Okay, yeah. So, um, wait. You can, if you see the setup here, you would see there are two distinct lines, wavy lines, and we also have the histogram. Let me try to enlarge it a bit further. Okay, now it's visible. It's more visible. We can see we can see histograms. These are the histograms I'm talking about. The deep green, the light green, the deep red or pink, and red. Those are the histograms, and um they are all indicating something. They're all there. They're not just there for fun. They are there to depict something. So how to interpret um the curvy lines or the wavy lines that we're seeing, those two wavy lines that we see here, that's the blue and the maroon, or is it maroon or amber? I think it's an amber, yeah. The blue and the amber color that we see here, that's this blue and the amber, the second one. So now once the amber color crosses the blue color and it's above the zero level, the zero level is the beginning of the middle. Let me just put it as the middle of the um two histograms, or the two sets of histograms. You can see this from here, from this middle here to this down path. That is a section, right? That's a part, that's like a section of the histogram. Then from here, also from this middle here to the top here, that's also a second half of it, right? So this middle here breaks the two. So now this, from this first half, from this middle to this part, to the upper part, it indicates like an uptrend. It indicates an upward movement in the market. Then from this middle here to down to this down also means or insinuates that there was a down market trend there. Okay, now how do we interpret it? How do we figure out what is happening here? How do we interpret what is happening here? Now, if or whenever the amber crosses the blue line, the blue the blue curvy lines, then it literally means that there's going to be an uptrend, especially when it happens, when it crosses it above the zero level. Whenever it crosses above the zero level, it means there is going to be an uptrend, or the market is giving an uptrend or going towards an uptrend. But if it happens, whenever it happens, let's look for, whenever it crosses below Whenever it crosses below the zero level, which is below the zero level, it crosses here. You can see it crosses here. Whenever it crosses below the zero level, it means there's a downtrend. It means there's going to be a downtrend in the markets. Now let's zoom out. Can you see that? When it crosses here, you can see the markets came down, trying to bring this thing up here, trying to bring my pointer back up, trying to bring the pointer back up. Okay, now when the markets, you can see the market was formerly here, right? So it was an uptrend from here. You can see it was an uptrend, then it's consolidated around here, before the drastic downtrend now came in. Before there was a breakout, not really a breakout. Okay, yeah, it was a breakout from the consolidation. Before it broke out from here, because we can say that there's a support here. We can say there's a support at this area. You can see my pointer. You can see that this area is a support area. So it broke out of the support area. It broke out of the support area, making it have a downtrend. So now back to the MACD rather. Back to the MACD. Now, if we see that, okay, if it's after saying this, we would say that we can't only use this to determine price movement, because you can't only rely on MACD that okay it has crossed, or you say that I'm trying to hold on. You can't say that okay, and since it has crossed here, you can see that since it has crossed here, then there's going to be a downtrend. Yes, mind you, this is a 4-hour time frame, right? This is a 4-hour time frame. You should be aware of that. 4 hours time frame, it's a long time frame. It means one candle forms after 4 hours. One candle will form after 4 hours. You can see one candle will form after 4 hours. So it literally means that this candle here, it means that this candle here, this blue green candle, took it 4 hours before it could completely form. So every candle here takes or took 4 hours to completely form. So that's what the 4 hours time frame means. Now we can't say okay, since the MACD crosses here, that or what happened. We can't say that because the MACD crosses here, that okay, this is a good time to enter the trade. It's crossed, yes, it's might come down, but it still doesn't mean that it won't retrace back up. So we need something we call confluence. Confluence means, or confluence point. Confluence means a point at which 2 or more factors meets. 2 or more conditions, or let me use conditions. A confluence means where 2 or more conditions means or determines the movement of the market. So that is what confluence is all about. It could be 3 confirmations that will determine the next movement of the market. So when you have when you have three confirmations that okay, this particular technique is or indicator is telling you that the market is going to go short, and you try another technique is also indicating that the market will go short, and another one is indicating that the market will go short, then I think that is a whole lot of conviction. I feel that is enough conviction to make you confidently take a trade in respect to or with respect to the market determinants by those confirmations, those confluence confirmations. So now the other confirmation I would need you to the reason okay the other confirmation I would need us to take note of is the 200 my moving average, moving average 200 that we set up here, this blue moving average here, this blue moving average. We didn't just put it there for fun. We didn't put it there for fun. I will tell you why we included or why we are using the 200 time frame. The reason we're using the 200 time frame is to serve as a confluence, as a confirmation. Okay. So you're going to look for after entering that trade, that particular after entering the trade, then or in order for you to know when and how to have a trade setup, a good trade setup, you would then use a trend line. Then use a trend line. You use an horizontal trend line because you need to determine um either a resistance or a support line. If you check here now, you see we have a resistance here. We have a resistance here. I'm trying to hope you're following. If you notice around here, we have we have support and at the same time a resistance. At the same time, it's a resistance. I'm trying to bring it a bit lower. Okay, let me redo that. Let me redo that. I guess it's too high. Yeah. Okay. Good. Okay. Now you can see this setup here. You can see at this angle here, at this area here, that's a resist. That's a support. That is a support zone. That's the support zone. The and around here, if you go back to the earlier, you see that it's a resistance zone. So it's a former resistance and a new support. So in order to determine or get a confirmation entry from this setup, now what we can deduce is using both the 200 moving average and the moving average convergence and divergence, that's the MACD. You will be able to determine that, okay, from the illustration I gave concerning the MACD, I told you that the MACD, how the MACD interprets the market is whenever it crosses, whenever the maroon or amber color, that's the orange color, like the orange color crosses the blue one below the zero level. The zero level is this the middle of the histograms. That's the zero level. So whenever it crosses it below the zero level, it means that there's going to be a downtrend. There's going to be a downward market movement. But whenever it's it crosses above the zero level, that's on top. That's on top. I mean points like this, points like this. You can see it's happened above the zero level. Points like this, points like this, points like this. It means the market would go on an uptrend. But whenever it crosses below, like points like this, points like this, it means that it's still going to be a downtrend. So the last cross indicates that the market will still go on a downtrend, although there's still going to be a mid-tier, a confluence. That is, the two lines seems to be approaching each other and about to cross each other. So what we would do is we would wait for a breakout we would hope for a breakout. You can see that this thing is still on the resistance, the on the support level rather. The chart, the candle is still resting on the support level. It has not broken out. So we can rather than entering the trade now, we would wait for, and also if you notice the 200 MA, the 200 moving average has also crossed the chart, which means that it is going above the candle, which also is a confirmation. Which is a confirmation that the market is still going downtrend. But we are going to wait. We are not going to enter the trade yet because we are still waiting for the third confirmation, which is would hope or would wait for the candle to cross the support level. That's these blue dotted lines that are added. We'll wait for it to, if it breaks out of it, then it means that this MACD convergence divergence is still going to meet. So we would wait for a confirmation. But if it doesn't cross, if it continues coming down, then it's a confirmatory entry for us. So that's what the MACD is talking about. That is basically what the MACD is talking about. Let's look for a setup. Okay, now following what I explained, we can see that around here there was a meet, right? The both colors crossed each other and it happened above the zero level. Which indicates the first confirmatory uptrend for us, right? Now we also have a support level. Okay, let's also talk about the 200 MA. You can see the 200 MA was below the candle formation. This is the 200 MA. It was below the candle formation, right? At this point here, you can see at this point here, it was below it. But we still wouldn't enter the trade because it's still not totally confirmed. So we then set up the trend line to find our resistance. So if it breaks out, we would have to wait for the setup. If it breaks out of, you can see it came down and almost touched it here. But since it's still touching, we won't take the trade yet because it's not a confirmatory entry until it breaks out. You can see it touches again, but consolidated for some hours before it's now totally broke out. So at this point of breakout, if we check it, you can see from this point of breakout, the market went up. It went up from this point of breakout. You can see it. You can see. So between this point of breakout here and this point here, that's some great. You can see from 130778 to, that is the higher up is 13625. It's not, that's a lot of people, and that is a maximum. That's a massive profit for us. That is a massive profit. That's one setup. So that's how effective and efficient the MACD is. If you have any question, you can drop your questions in the comment section. Please do not forget to like and subscribe in order to get more notifications whenever I drop any new strategy or any updates concerning this strategy. You can drop your questions. If you have any questions, you can drop your questions in the comment section. Okay, I'll be talking about, because someone asked about setting up take profit and stop limits. About setting up stop limits and take profit. Yes, setting up your stop limit and take profit in this kind of setup here, what you do is, most times I would suggest, but because this is you can draw this setup on a smaller time frame. You don't even need to draw this setup. All you need to just draw is drawing your resistance or your support level. That is all what you need to draw, because the 200 MA and the MACD, that's a moving average convergence divergence, it would always show or replicate. It always replicates on other time frames. So all what you need to just include or draw newly would be the support and the resistance levels. If you don't know how to draw that, how to identify your support or resistance level, I might do a video on that. I might do another tutorial video on that for us to be able to identify support and resistance levels. Okay, how to identify or determine your take profits and stop losses. Okay, so someone asked me about how to set up take profit and stop loss, and I would like to show you two methods actually. But I will show you how you do it for MT4 or MT5, and also how you do it here on TradingView. in case you trade with trading view. So let me start with trading view. Okay, for trading view, there are actually two representations for that. If you're setting take profit and stop loss for long positions or short positions, TradingView did a provision for that, a very good provision for that, in order for you to be able to successfully take long, to be able to take profit and stop losses for long positions. And if you want to do that, set it up for short positions. There's also a provision for that. So how do we go about that? This is what you do. You click on this pen, this drawing pen, then you scroll up, okay, yeah, these are the representations for that. In case you want to set it up for long position, you click on the long position. If in case you want to do it for the short position, it's just a similar process. So I'll take you on how to do it for one. So using the setting up for the long position, this is how you go about it. So many people have been asking, how do I set up take profit, stop loss on my MetaTrader? How do I determine that? How do I determine my take profit or stop loss? Now, for those that already know how to do that using this tool, using TradingView, doing it on TradingView, this is how you go about it. If you want to determine your stop loss or take profit for short positions, that's for sales, you click on this. Click on this. Automatically it shows on this place. We already have one there, so you can just move it away from there. Yeah, so that's for shorts. Bring this one down, since we're talking about that. Don't know why it's not moving. Don't know why it's not moving. Thought to come on. Thought to move. Thought to move. Let me delete this and get the new one. Okay, so no, right, it's messing up. I prefer doing it on my MT4 or MT5 than setting it up here. But I just want to show people that don't know how to go about it. Okay, it can be very difficult, especially when you're not using a mouse to drag it or doing it on tab. So this is how to go about it, but I'm trying to show you how to determine a risk to reward ratio, how to determine your risk to reward ratio. You can see risk to reward ratio here is 0.86, right? Now, what do? You reduce. This is I'm just giving a random take profit and stop loss illustration here. Unlike, I'm not applying it to anything. So don't copy this. I just want to show you how to do risk to reward ratio. Now, if you see this, you can see it changing. The risk to reward ratio, you can see this is 2 points, this 3 point something. It means the amount you will lose will just be 1 ratio the amount of winnings you will get if it goes in your favor. If the market goes in your favor, which is a sell market, this is a short position. If it goes in your favor and hits your take profit, it will be a 1:3 risk to reward ratio. It will be 1:3 risk to reward ratio. So that is what risk to reward ratio is talking about. Let's say you enter the trade at 20 naira and it hits your TP, your take profit. This means that your 20 naira will be multiplied by 4.71. You get? That is just what it means here. Likewise, if it doesn't meet your take profit, it means that you will lose 0.229% of what you deposited, of what you used to trade. So that is just what that is talking about. So I'll be in my next class, I'll be taking you on how to also set up risk to reward ratio. You can like, subscribe to my channel to follow up on more strategies that I'll be posting. Thank you very much.